Hello everyone, my name is Mark and I am going to be sharing my experience with you as I learn how to sell put options and to sell covered calls. Um, that's basically where I'm starting at this point. I've done a few trades. I'll show you here what I've done so far. Basically, started at the beginning of the month. I've listened to some videos on YouTube on how to open sell puts as well as covered calls. As you can see here, I've looked at some doing some cash secured puts, um, and so at this point, I've opened and closed three positions. I still have two positions open. You can see as of today, this morning, I opened up a position in Intel INTC. And basically, what I'm going to be doing, my goal is to share with you my experiences. And so here I am live and basically looking at USB today. Um, Brad Finn, Invest with Henry, some of the YouTube channels that I follow. Just to get started, I'm not financial advisor. I'm just sharing with you my experiences and kind of learning a lot of these things. And so I'm hoping, if you have any input or guidance you want to suggest, leave a comment. Feel free to subscribe and like, and we'll go on a journey together. And hopefully, we can make some income selling options. But here I want to look at USB. I currently have an option here, a sell option, put option that is a 36 strike. And you can see it's fallen below the 36 strike. And if I go to my 3-month historical, you can see I've set a bottom of what I see as far as the stock. It looks like it's approaching that bottom or at that bottom now, which is a 35.2, which is that marker there, that line. And so what I'm saying in my option and my put option is that I'm willing to buy USB at $36 a share. An option contract is 100 shares, so I'm basically willing to spend $3,600 to buy 100 shares. One of the things I'm looking at today is what I've learned, and looked at a few videos last night as well, just to make sure I understand what I'm doing here. As I said, I'm new to this, so you're watching this in my real-time experience. So if I hit roll this option, you can see my current, or actually what it's giving me the option here of 9 days, September 22nd. If I take this out and say, okay, I'm willing to buy at 36 currently, but am I willing to buy at a lower strike price? And as a result of that, will I get additional premium is what I've learned. So I'm going to test that out and try that today. So let's say if I'm willing to buy at 35, am I willing to buy at 34, for example? The delta is about 30%. Could go out a little further, but you can see it would be a break even here. So if I went out 44 days at about a 34 strike, I'm saying I'm willing to buy this at 34. I was willing to buy it at 36. So if I roll this out to let's say a 34, it says that based on this, hit continue. Okay, I got a bid and an ask. So that's going to be maybe a challenge here. Will I be able to get it at that price? U.S. Bank, typically what I have learned is that having a smaller difference in the bid and ask is definitely an advantage. As you can see, the U.S. Bank that was my second trade on the 5th. I've actually learned a lot since the 5th. And if I was currently looking at U.S. Bank with this difference in bid and ask, I would have not placed the trade in the first place. But because I'm looking at what are my options to do this. And you can see that, low likelihood to fill. Looks like if I go back to the today price, you can see that it's trending lower. Again, it's probably going to remain steady at this. I would imagine for the rest of the day. Of course, that can change at a negative 4%. Again, I'm learning these, trying to understand, what's the best um, way for me to do this. And so let's see if I put the 0.15 there, what happens? Minimum credit, so $15. So I'll make $15 the to get it at a 34 strike price. So if I click review order and I hit submit, pending filled. So what that means is that I've now put $15 into my account, and instead of having to buy it at 36, which is what I was willing to buy it at, I can now buy it at 34. So that's great for me because I've saved $200 to buy the stock. I've made $15, and if it does hit the 34, I'm happy to buy the stock at 34. And if it floats above 34 and expires above 34, then I'll save the 15 and move on to other stocks. But yeah, that's it for today. I hope that was informative, or maybe you can criticize me. You can help me to figure out maybe a better option or a better way I could have done that. And then as I go forward and learn, hopefully I get better at this. But until then, I'll see you then.